We're at the early stages of a new cycle. Now, in retrospect, 2008 through to 2013 was an interesting period of time just looking at mining equities. They've gone up and they've gone down. So they didn't take the shape of a normal boom and bust. For example, from 1999 through to about 2008, it was a long and very enjoyable ride upwards and then a very short and sharp correction down. In the period of time we've just had, it was not that. It was almost symmetrical, up for a similar period as it's gone down. But I'm fairly confident on the basis of liquidity indicators that we've gone full cycle. The three indicators which you can look at which give us the best view of liquidity is, first of all, mining IPOs. Now, from 2010 and 11 were extremely good years in terms of raising money for IPOs, the number of IPOs conducted and the dollars which were put away. In 2012 we saw a market reduction in that. 2013 we saw some activity, but the market for IPOs is effectively closed. And I think that tells you, first of all, that the ability to raise capital in mining is down. But secondly, for an unproven company, which is untested and unproven, which is what an IPO generally is, investors are possibly favouring secondary raisings, so rights issues and other raisings in companies they're already invested in. So the amount of money which can be raised for something which is new is extremely limited. So that's the first one. Exploration spend is an excellent barometer of where we see companies' ability to replace funds, or their perception of their ability to replace funds. So exploration spend over the last mining boom that we saw went from low and a very, very slow and low period at the start to enormous levels in 2007, 2008. In 2009 we saw a crash there, but then 2010, 11 and 12 were new highs, I think you'd say. 2013 we don't have numbers for, but all of the indications are that number is going to be extremely low compared to 2012. So there's been a correction there. Activity has dropped and the drilling companies are showing low levels of activity. And I would expect that would be something which is a little bit slow to take off from this point. As we go into the new cycle, I expect that this would be much different to the period 2008 through to 2013. It was different to most cycles, I think, because economic stimulus was feeding through to the value of equities in the market. So we saw the US economy, European economies and the Chinese economy all stimulated one way or another, which almost kept the party going from the mining boom that we had. Junior companies in particular were very quick to recover, and the large companies also leapt to more or less their highs that they'd been at in terms of market cap and in some cases price. So what I would expect to occur, this being a more normal cycle, would be a slow period of time for IPOs. I certainly wouldn't expect the rest of 2013 to be a good environment to be raising money, but 2014, 15 and beyond, I would expect to see some companies being able to. Exploration, I would expect a slow recovery. So this year and next year and the year after, I would expect reasonably similar levels of spend and then increases from that point onwards. And mining transactions, companies which have the luxury of enough cash to be able to make prudent acquisitions can happen at any time, so they may occur. But at the moment there's guarding of cash by companies, so I wouldn't expect too many cash transactions perhaps for the next 2 or 3 years, but very opportunistic acquisitions by companies that are in a fairly good position. They will probably also have the strength of some paper, so they might be able to use some of their shares in a transaction as well. For the next little period of time though, mining transactions, very quiet. We would see cash transactions probably give way to paper transactions as we go into the next real boom phase of the market, but that could be several years off yet. I would expect sideways conditions for majors, but the implication of saying that we're in the early stages of a new cycle now is more sideways than down, so limited material downside for the sector as a whole. Now, stock-specific examples, I think there will be plenty which some will go up, more will probably go down or sideways than that. Juniors I would expect to underperform majors purely because they have the risk of having to raise funds, and that could be difficult for a period of time. But from an investor's point of view, I would say that now is the time to be looking around for new things and perhaps buying them selectively if you have. Now, I come from a fund and that's exactly what we're doing. We're looking for acquisitions and investments, and we're spending a lot of time assessing those.